So we're going to get into the whole demonstration for the filing of the S04. Now, just as a precursor, you'll need to have information to do the filing, right? So if you're employed and you have self-employment, you'll need to have your P24. You'll need to have something, maybe a financial statement or an income statement. If it is that you gave donations, you'd need to have all the information relevant for this process. So let's get into it. So you would have already had an online account. So when you log into the website, this is what the page will look like. You're already aware of that. However, to do the filing, you can use any of the links on the left side of the page, or you can use Manage My eServices account, or File, Pay Taxes, or Access account. So let's go ahead and use Manage My eServices account. The page that will come up next will look something like this. Now, the scenario that we're going to be working on today is for a sole proprietor who is employed. His name is Abe Blue. And Abe Blue has a few things that we're going to be looking at so we can reinforce some of the things that my colleague said earlier. Oh, by the way, I'm Antoinette Anderson, as you would have heard so many times before from Mr. Johnson. All right, so this is a page that you'll come to when you click on the Manage My eServices account. So we're going to explore the scenario. Abe Blue, he has self-employment activities. He receives income from renting. He has rental expenses. And we're going to be showing you so you can have an idea of what that will look like, or what his case will look like, basically. So it's going to be projected on your screen in a bit. You can take the opportunity to maybe do a screenshot or take a photograph of it so you can follow as we go through the return itself. All right, so bear in mind you can still post your questions to the Q&A, and the presentation or the webinar is going to be available for you to view again from our YouTube channel. So stay tuned for that. So we're seeing the scenario. Mr. A Blue, happy guy. All right. So I'm on his account, and we're going to be filing the S04 for 2025. Now, when you scroll to the lower part of the screen, you'll notice the 4 tax types that would be applicable for any person who is self-employed. The return, however, is filed from the income tax link. So if you go to education tax, you'll not have an option to file, or NHT or NIS for that. So we're going to go to the income tax link. Now the periods that are there are listed on the left side of the screen. So we are seeing December 31st, 2025 and December 31st, 2026. The 2025 will represent the final return, which is the S04 that we're going to be doing for Mr. Abe Blue. And the 2026 is the estimated income tax return, which is the S04A that we're also going to be doing. Now bear in mind, and don't forget this, both returns are due at the same time, right? So the S04 provides the precursor for the S04A. So both of them will be done at the same time. They have the same deadlines. So we're going to file return for 2025. So we click on the file return option. All right, so for preparation for this, I'd already populated some information in the interest of time. So we're just going to go back to editing that information. So when you click the File Now option, this is the general information page that is presented. Now, the general information page is very important. You can't go any further unless or until you have completed all of the required fields. The first of them is the NIS. The next one is this your first time filing? This one is going to be the first for Mr. Abe Blue because he just started operating in 2025. Indicate the period being filed for. Now, based on the act, the period that we're focused on, or the calendar year, is what we focus on, and that's from January to December. Any period outside of that would be period that is permitted, and it's usually based on permission from the Commissioner General. So the period being filed is the 1st of January 2025, and his accounting period also synchronized with that date, January to December of the same year. The residency question. Of course, we understand from the presentation that was given why it is important to say whether or not you are a resident. You will indicate if there was the date for the registration of the business and the start date. If you have commenced trading, and in this case, Mr. Blue had commenced trading, so we'll select yes for that. Are you gainfully occupied? So this is something that we have to be mindful of, because gainful occupation would suggest that you're self-employed, earning income as a self-employed person. So if it is that you are not, then you would not say that you're gainfully occupied. Right, so are you gainfully employed? In this case, yes, you would be, because there's also going to be employment income in this scenario. So we're selecting yes for that. He's not employed to a foreign embassy or high commission, so that is going to be grayed. Once he selects employment, that part is going to be grayed. The financial accounts were prepared. Now, so we understand that especially for small and medium enterprises, you may not necessarily have somebody who is external to you that prepares your annual returns. So the option is available for you to select yes, to select internally if you're the person who does it, or externally if somebody outside of yourself who you would have given designation to prepare it. So Mr. A Blue is preparing his own. So he would have entered his name, his TRN, his address, and phone number. The information that he enters will be replicated below if the information is the same. If it is not, you may uncheck the box and enter this different information. Now, once you have satisfied all of the required fields on this page, you're going to click on Next. All right, now Next takes us to Section B of the return. But let me just give a brief synopsis of what to expect on this, because Section B captures all of your income sources, right? And income sources that are listed on this speaks to income from trade, business, profession, or vocation, speaks from income from rental of property, income from employment and offices, if there is income from investments and other sources, or if there is income from outside of the island. So the Act speaks to worldwide income. So if it is that you're earning here, or if you're earning overseas, all this information is captured in the Section B of the return, and this is the page that we're on now. So let's look at the scenario. He had income from gross sales, he had income from employment, and he had rental income. So we're going to plug those figures in the required fields. So where it says gross receipts, sales, income, and let me just highlight another thing. The boxes that are to the right that has the zeros in them, if you notice they are grayed, it means that you can't plug anything directly into them. However, the line items on the left side that are in blue, those are hyperlinks. And so what the hyperlink does is to give you the option to enter the information that will automatically be populated on the gray boxes. So let's go to gross receipts, sales, income. Now on this screen, there are 3 columns: trading activities, rental activities, and the total of both of them. There are also information that will capture the cost of sales or cost of operations and business administrative expenses. Now bear in mind, this list of expenses is not exhausted because we know that a lot of things are changing in the environment. So there may be expenses that you may have that's not included on this list. But I will take you to line 37 that has an expense list that whatever is not captured on this, you can simply note them in this box and plug the total in the corresponding field for it. So let's go ahead and populate the return for Mr. Blue. He had a gross income or gross sales from his activities to the tune of $9,500,000. His operating expenses were $5,550,000. So the scenario is not going to capture them in details to say what that figure encapsulates. So let's break this out. So he did rental. He paid rental for space to the tune of $2,050,000, and then he had some additional expenses. We'll list those later, of $3.5 million. So that those would capture his gross sales. Now we also had income from renting space, and the rental of income was $7,600,000. Right? He had rental expenses. Well, we're gonna put that on the next line. So let's close this by clicking OK. So now we're seeing the figures populated in the grade boxes. Let's add the expense for the rental. And the scenario said he had $2,586,000 in rental expenses. Okay, now his income from employment, and remember I said earlier that you need to have your P24 from your employer for this section of the return. So you will click on salaries, wages, bonus, fees. We're going to be adding the record. Unemployment in this case would mean that you have an employer like myself who removes the statutory deductions for NHT, NIS, education tax, and income tax. So I am considered an employed person. So Abe also had employment, and from his employment, he earned $750,000 for the year. There was no income tax taken, and you can appreciate why, because the income tax threshold is $1,775,000. So from his employment, there would be no income tax taken at that source. So the P24 usually is replicated here, or this replicates the P24. Whatever you're seeing here is what you would see on your P24. So we're plugging the information directly from the P24 onto this page. So the next item would be his NIS, and the NIS that was taken for that year is $22,500. There were no other allowances or any other benefits in kind or cash. So we're going to click on OK and proceed to complete the return. Now, there were no additional income from investments or income from outside of the island. Of course, the scenario is limited, right? So we're focusing on what the scenario is. So once we have satisfied ourselves that there are no other income sources for Mr. A Blue, we're just going to click on Next. All right. Now this section speaks to exemptions, deductions, and statutory income and allowable losses. So the scenario said he had capital allowance, he had donations, and he had some losses from carried forward from 2024. So we're going to be identifying those line items. Now what I should point out, for the capital allowance, you would have had to complete a Schedule 2. You can find the Schedule 2 on our website under Forms, Income Tax Forms. You can find the Schedule 2 there. So you would have had to complete the schedule first and foremost to arrive at the amount that we're about to put on the form. So his capital allowance in the year was $280,000. And there it highlights that you need to attach the Schedule 2. So he also had donations. Now, what I should point out where donations are concerned, you're not allowed just any amount for donations, because really and truly donations are restricted to 5% of your statutory income. So if you're trying to claim more than that, the system is going to tell you that it's too much, and we're going to test that. All right, so he paid it to the Hands and Heart Foundation. All right, the TRN. And part of the reason why you make contribution to charitable entities is because the transparency that would exist in this is tantamount, right? You make a contribution to a charitable organization, they have to be transparent. So they would need to provide their TRN for this process. And I would say they live anywhere. All right, now, say I would haphazardly put a figure on this for the contributions. When we get to this page, you notice it's highlighted in red, and it gives a message. It says value cannot exceed section B, line 48. That speaks to the line that has the statutory income. So we would have to adjust this amount before we can go further. So just so you know what will happen if you try to do, or if you try to claim more donations than is allowed. So let's revisit this amount. His total donations was $325,000. So from there we see we're in the clear. So he is in conformity with what is required where donations are concerned. Now, as it pertains to losses, so he had carried forward a loss from 2024 of $450,000. Now we have completed the sections that speaks to exemptions, deductions, and statutory income, along with allowable losses. So we'll proceed to the next page. And on this next page, we're going to be computing the income tax and education tax. Now, so on this page, let's look at the line item on this based on the scenario. He had specified services, an amount was withheld from services that he would have provided, and that amount is $115,000, right? Now we also had under section G that computes the education tax, line 5, that's the final line on this screen. It says education tax deducted, paid by employer, just for the employee's contribution. From the scenario, his education tax that was taken at his income or employment income is $16,368.75. Right. So we have captured information relative to the computation of the income tax and the education tax. So we can move to the next page. Now on this next page, Schedules A and B. Now, why Schedule A, why Schedule B? Why does the question seem to sound the same? Schedule A speaks specific to NHT, so just bear that in mind. Whatever you're answering here is going to determine whatever NHT calculations are done on this form. Schedule B speaks to NIS, and the same applies. Whatever you respond here is going to speak to whatever the calculations will be for NIS. So let's respond to the questions. And bear in mind, every required field must be completed before you're able to go forward. Are you a domestic worker? No, Abe was not a domestic worker. Is he a Jamaican employed by an embassy? No, he's not. But he did have income from self-employment, so we'll put yes for number 9. The NHT deducted and payable by the employer just for the employee's contribution, we'll put that in box 10 at section C under the Schedule A. Now his NHT contribution from his employment is what is required here. Now bear in mind, remember what we said about employment. Employment is if you are working for somebody and they are taking the deductions from you, right? If that is not the case, then you would not need to put anything into this box. So his employment took $15,000 from him for NHT contributions. Right. Now that completes Schedule A. So that's the NHT schedule just completed. Schedule B for NIS. Were you employed during the year? Yes, he was. Now, as a requirement, when there is employment, the table for the NIS has to be completed. So to complete the table, you will click on the hyperlink. Now you have options for pay cycle, whether weekly, fortnightly, monthly. I'd already gone ahead and populated it on a monthly basis. So I entered 12 rows, 12 representing the months of the year, and each month there is an income that is derived and an NIS that would be payable. So his $750,000, let's assume he got a fixed salary for the whole year of 2025. So his $750,000 would translate to $62,500 monthly. So we plug each month with the amount for $62,500. The NIS rate for the individual is 3%. So the column that's in the middle, or the next column, would require that you enter the rate for each period. The column that's across from it would basically you entering whatever the NIS was for that period. So let's finish these rates. $1,875 would be the NIS amount when you divide the 22,500 by 12. Correct me if I'm wrong. You can put it in the chat. 22,000 divided by 12 months. 22,500. So we plug the NIS contribution for each month into this column. Now we have entered all of the information that is required for this schedule. Now before I move from here, I wanted to point out something to you, because on this schedule it sectionalizes the embassy employment contributors and the domestic employed persons. Those contributions are separated from income from employment and offices. So depending on who is completing the form, or depending on where your income was derived from, you'd plug the schedule accordingly. So if it were that A Blue was employed to the embassy, would have entered his information in this column. I hope you can see my mouse circulating this. And the rate would be in this column along with the NIS payable. Alright, so that's done. Now another thing, if you miscounted, it will tell you. If you counted, if you missed numbers, it will tell you. So there are checks and balances on this one. Now to complete the questions under the Schedule B. Are you a Jamaican citizen employed by the embassy? No, A Blue isn't. Were you employed as a domestic worker? No, he wasn't. Did you have income from self-employment? Yes, he did. The section C under the Schedule B asked the information was their NIS paid from stamp card. That was not the case for Mr. Blue. So we're leaving that box empty. However, the NI is deducted and payable by his employer is going to be relevant here. But what you're putting here is or should reflect both employee and employer's contribution. Right. So his individual contribution was $22,500. Now when we double that, it's $45,000. So we put 45 in that box. Why is it important? If it is that at the end of, if it is that you enter just one contribution, 22,500. When you get to the final page, you'll realize that there's a shortfall in the NIS that was taken at source. So it would appear as though he's required to make a payment again. So we don't want that to happen. So you have to double the amount when you get to this box right here. Now, during the year of assessment, did you conduct any transactions with any affiliated company or connected person? Now, if you have any questions, before I go any further, if you have any questions, please go ahead and use the chat. All right? And for persons who are concerned that we may be going too fast, the webinar is going to be posted to our YouTube channel that you can revisit, or you go again to get it. You can go ahead to listen to it again. Now, there were no connectivity or no connection with any affiliated company throughout the year, so we're going to use no here. Now, at this point in the return, remember we spoke of P24s, income statements, anything that had to do with expenses or donations. Those attachments would be required at this point. So you can go ahead and make the attachments for whatever documents that you have to support this return. And bear in mind, it is pivotal, and it would have been said earlier by my colleague, Mr. Johnson, that keeping records is very important. And the records that you keep is what you will be required to upload at this point in this process, right? So you can upload multiple things, but it's one file at a time. All right, now we're going to be moving from here. We're not attaching, but you will be required to attach when you get to this page. So when we go to next, what this page does is to summarize everything that we just did. So let's do a snap of it. His self-employment income, his net profit from self-employment was $3,950,000. His net profit from rental income was $5,014,000. His income from employment netted to $727,000. Of course, when you remove the NIS, that's what is left from employment income. Now, when we total all of this income together at line 50, the total income was $9,691,500. Now, we're not there yet for the tax part of it. This is just his total income. But relative to the deductions, there would have been capital allowance deductions, allowable losses, and donations. And when we total the donations, capital allowance, and the losses, that came to $1,055,000. So when we remove that amount, what is left is $8,636,500. Now from that, we're going to be calculating the income tax. The first $1,774,554 is taxed at zero. That's what we call the nil rate, or the threshold. So that's the portion of his income that would not be taxed for income tax. The next $4,225,446 is going to be taxed at 25%. And 25% on that is $1,056,361.50. The amount that is in excess of $6 million is $2,636,500, and that is taxed at 30%. So remember from Mr. Johnson's presentation, all income in excess of $6 million is taxed at 30%. So 30% of that 2.6 million is $790,950. Now when we total the amounts for his tax due, it's $1,847,315. Sorry, $1,847,311.50. Now, because he had paid income tax or the specified services, there was a 3% taken from him that would go towards the income tax that he would pay at the end of the day. So instead of him paying this $1,847,311, we have to factor in the $115,000 that was taken as specified service. So when we remove that, the tax that would be liable, or the income tax that he'd be liable to pay, is $1,732,311.5. So let's go to section I. And section I gives the summary of taxes and contributions payable and whatever balances that's due. In column A of section I, that has the net amount payable. And if you look to the left side, it will show each tax type. So income tax is the first one, then education tax, and NIS and NHT. So we'll review each of them going across. The income tax for the year was $1,732,311.50. There was no estimated payment made, no contributions were made throughout the year. And I would pause here to say that making payments towards your quarterly contributions is very important, because when it gets to the end of the year and these payments are all total together, you don't want to be wowed by it. You want to ensure that you're paying throughout the year so it don't seem like a burden at the end of it when you're doing the final return. So he has $1,732,000 for income tax. He has $177,000 for education tax, $255,000 for NIS, and the NHT $237,000. All of this is going to be due immediately, right? So basically the return is complete. The Schedule A and Schedule B is what follows, and it just shows the breakdown of how the calculations would have been done for each of them. And so we can go ahead and submit this. Now, submitting the return, on the day when it's submitted, you'll have a window where you can delete it. What if you missed some things, or what if you had other figures to add to it? You can go ahead and delete and redo it. Or you can go ahead and edit it. So you can always do an edit, or you can do a delete. Let me show you how I got there. I'm sorry. So you submitted it just now. We go back to the income tax. You click on file return. The view submission option is there. It says that it was submitted. But you can view it. You can choose to print, choose to edit, choose to delete. The options are still available for it. All right. Now we're going to move straight into the estimated return. And the estimated return is way more simpler. It's shorter, less pages, less information required. So we click on File Return across from the 2026 period. File Now at the upper left. On this one, you're reporting from the 1st of January 2026 to the 31st of December 2026. You'll be required to put your phone number, email address, the NIS. I'm taking the NIS that's on is S04 for last year. Yes, he's a resident. Are you a domestic worker? No, he's not. Is he a Jamaican person employed by an embassy? No, he's not. Do you anticipate a significant change in your statutory income? Yes, he probably will. So let's put that there. So under the income tax heading statutory income from immediately preceding year of assessment, and the instruction here is to transfer the amount from section D line 9. So let's revisit the S04 that was submitted. So this is the S04. Pay attention to the section B, section D. We're going to section D, line 9. So this is section D, and line 9 is this one. Line 9 has the income as the amount 8,636,500. So we're going to be copying that information to this page. So it's $8,636,500. So you give an idea of what would be the cause for you earning more or less. If in this section, if in this second box in this section where it says net increase / decrease in statutory income, if you're going to be entering a loss, you put a negative figure in there, because that would suggest to us that this amount is going to be subtracted from the one above. If it is that you're expecting an increase, you put a positive figure in there. So he will positively be earning another $2.5 million over the 2026 period. Now, when you've entered that and you give the justification, you can go ahead and select next. Now, on this page, of course, we don't want to be taxing you 2 times. So if it is that you're expecting an income that is going to be taxed at source in 2026, you will outline what that income would be based on the previous year. So there were no pension income, dividends, gross interest or annuities, nor director's fees. There was just employment income, and he had employment for that year. So we're going to go to the return for transfer from section B line 9, and that is on the S04. So section B, B as in boy, line 24, not line 9. Section B, line 24, has his income less the NIS, and that's the amount that we're going to be putting back here. So when you place that amount here, what it does, it removes that from the total calculation when we're doing the taxes. So the taxes, when it's being calculated, will not include this, because it's going to already be taxed at source. Now, if you have any attachment at this point, that's the option to add the attachment. So when we go next, this part summarizes what the return. This part summarizes the amount that the return is expecting. So in section B, it shows the estimate for the year. So this is the amount that is going to be required for the person to pay for the year. But of course, we don't ask you to pay all of it at once when you're doing it based on the estimate. You pay it on a quarterly basis. So the quarterly basis here is highlighted at section C. So when you add these amounts, you'll make these payments each quarter, and it was said earlier in my colleague's presentation, the quarterly expectations are due by the 15th of March, 15th of June, 15th of September, and 15th of December. So by December, you'd have paid off all of this if you stay on point with those quarterly payments. Now, I hope you're putting your questions in the chat. Our chat monitors are monitoring very closely, so go ahead and enter those questions there. And the presentation or the webinar is going to be posted in our YouTube channel, so you'll get a chance to see it again. Now we're going to go ahead and submit this. Right. So we have successfully submitted both our S04 annual return for self-employed persons and our S04A the declaration of estimated income and taxes for 2026. That's basically it. Thank you so much for your time. I'm going to be asking you to stay tuned. Our next webinar is going to be on March 25th, 2026, and that one is going to be targeting the body corporate or limited liability entities. You don't want to miss that. So for persons who have limited entities that wants to get the information relative to filing their returns, you need to be at that webinar. Thanks again, and enjoy the rest of your day.